Welcome back, everyone. Today is April 15th, 2020. I am Jerry Hall, and here are my thoughts from Costa Rica. I want to start this particular installment off with a little look back. Now, some time ago, I'd gotten involved in consuming content from the Real Vision Finance YouTube channel. And in that, last year, Raoul Pal put out this, "Is a US recession coming?" And one of the topics, as you can see on this graph, was taking a look at these 5 US companies and their debt to income ratio. Now, keep in mind that all the various asset classes do have an effect on each other. So when we're looking at debt to income, what we're looking at is how many, like for instance, corporate bonds have they issued relative to the cash flows and revenues that come in from the positive side of their balance sheet. And where's that equilibrium? Well, this chart he used to illustrate some points in a concept that he put together called the Dune Loop. Here's why it's relevant today. For instance, just taking a look at Ford Motor Corporation. They're at over 425% debt to equity ratio. That's their cash flows. That's their total revenue. That's their assets on their balance sheets, i.e. land they own, etc. You and I, as citizens, could never survive operating our households and our lives in a fashion like this. The sheer weight of the interest to pay back the loans we've made would bury us. We could not do it. How have companies been able to do this? Well, they've issued bonds, obligations. They borrowed money with obligations to pay back at very low interest rates relative to what you and I would have to pay for loans. They've taken advantage of policy as it pertains to the tax code, where they are allowed to write off all their interest that they have to pay out. They get to write off all the interest on money that they've borrowed from the Fed to buy back their own stock. They've increased their shareholder value by buying back that stock, creating this almost false equity, right? This false value. Now, had things stayed status quo, it's hard to say how long they could continue to operate that way. Well, let's throw in a shock to their business. Let's throw in a shock to their cash flow and their revenue. Let's say a health crisis, an unforeseen health crisis sweeps the globe, and their cash flows and their revenues go down. Obviously, while people are locked up, they're not out buying F-150s or Escapes or Explorers or Fusions or any of the other number of models that they make. And as their revenues and cash flows go down, their debt has not gone down. Now, in the big scheme of things, is that a big deal? Well, it is when your ability to borrow more money is affected. Well, what affects the ability to borrow money. It's very similar to you and I in our personal credit scores. For instance, those of us that have 760, 780, 800 point credit scores still can borrow money. And that, the best that the market has to offer us rates. You start slipping down below 700 and the rates get a little higher. And the ability to borrow gets tighter. You slip down below 600 and now you're sitting in a whole new category. You're a credit risk. If you can borrow money, you're borrowing money at a much higher rate. The cost to borrow goes up. Well, why is that important here? Well, I want to direct your attention to this particular little Google search I did. And here we have financial concerns. Moody's downgrade of Ford to the Baa1, which is the highest junk rating. So they have gone from an institutional investment grade credit rating now into junk. Well, what does that do? Well, that makes the cost to borrow money go up. It's much higher. And it cuts off access to the biggest buyer of their debt over the last 10 years. And that group, those investment grade bond buyers have been pension funds. They've been sovereign wealth funds. They've been insurance companies. They no longer have access to cheap money. What is this going to do for a company like Ford? Most likely major restructuring. Possibly bankruptcy. What happens in a bankruptcy? Debt is forgiven. Well, that's probably not a bad thing for Ford, but what about all those folks holding the notes? All those folks holding the bonds? How much return are they going to get for every dollar they put in? Chances are not very good. How is this germane and how does this apply to crypto assets? Well, everything is interrelated. As you see, our debt plays a big role in the ability to keep the machine going. Well, when credit markets get shaky and people are, and I don't just mean individuals, I'm talking about every entity in the economy is searching for a return on their investment. And the returns that they were getting are getting slammed. Gold comes to mind. Now, for years and years and years, gold was and still will be one of these asset classes that tend to act inversely to equity markets and most likely currency markets. I mean, more importantly, currency markets. Now, for the last, since 2007 and that 2008 weirdness started to happen, there was a tremendous amount of QE, quantitative easing, and money created. However, most of that money stayed within the financial system. And when I say financial system, I'm talking about banks. Well, what we got going on now is unprecedented in that there is going to be a large infusion of cash into the consumer level of the economy. checks, electronic payments going directly to citizens. Those citizens are going to take those dollars and they're going to go out and purchase these items in the everyday economy. Well, when you have more dollars chasing the same goods and services, you get inflation, which makes the case for gold. Now, the primary foundation of the case for gold is A, its limited supply, and B, the fact that it cannot be created by a central bank or government. It's a product that is mined from the earth, refined, and there's a market that finds value in it. Well, I believe the same case can be made for digital assets. Case in point, yesterday, I talked about human capital in value outside of dollars. Today, I want to talk about dollars. I want to talk about currency value. I bring up Coin One. This is a company that joined RippleNet in 2018. You can see on the screen that this company is posting an 80% customer retention rate, which bodes well for the growth and continued success of the company. But what really is huge here is the fact that the average volume growth per month since their launch in 2018 has been 50%. That is remarkable. That's growth. That's huge growth. And they're dealing in a market worth $33 billion a year. Now, to date, they're working in 12 corridors. But what I found really interesting is the fact that they're starting to leverage elements within RippleNet to increase their value. It is not unlike you and I leveraging each other on Twitter and Facebook and YouTube to gather information, exchange information, and add value to each other. What I'm talking about is RippleNet Home. This is their internal customer portal to reach out directly to other customers without having to use a Ripple intermediary. You got to remember, everybody inside of RippleNet is working within a regulatory framework. So if you are a RippleNet customer and you are at RippleNet Home and you are looking for a corridor, let's say you're Coin One out of South Korea, and you're looking for a corridor into Brazil because maybe a small corporation in Korea is now starting to import Brazilian hardwoods, and they wanted to, develop a relationship on the ground in Brazil. They make the connection through RippleNet Home and use that connection to convey the value saved directly to their customer. Now, there's a flip side to that. That Brazilian hardwood company in Brazil is going to have a lower cost of doing business. They're not going through the 3 to 4 intermediaries involved in having a relationship with a paying customer in South Korea. The value proposition just gets stronger and stronger and stronger. That's why I remain bullish in this extended bear market. That's why I will continue to produce and publish the bull case for Ripple, RippleNet, and the XRP token. I encourage you, if you're not clear about any of the content, go back, rewatch, grab the URLs off the video clips that I put, and see for yourself. I want to thank you all for taking the time to consume this content. Please leave a comment. Please subscribe to the channel and send me a like. I'm trying to build this up. That's one of the ways you can let me know I'm adding value. And until next time, folks, Pura Vida.